Palantir Technologies has made headlines once again as its stock surged by over 5% after the announcement that the North Atlantic Treaty Organization, or NATO, had officially acquired the company's cutting-edge artificial intelligence-enabled military system. This acquisition, executed through the NATO Communications and Information Agency, represents a major leap forward in the organization's broader effort to modernize and enhance its defense infrastructure with sophisticated digital solutions. This development highlights a turning point in the use of artificial intelligence across defense alliances, demonstrating how military partnerships are increasingly relying on emerging technologies to strengthen operational effectiveness. The system in question, named the Maven Smart System, is designed to integrate artificial intelligence into strategic military planning, situational awareness, and battlefield operations. According to NATO Communications and Information Agency General Manager Ludwig de Camps, this newly acquired capability will offer tailored artificial intelligence tools that are specifically developed to support the alliance's needs on the modern battlefield. He emphasized that these tools are intended to ensure that allied forces are better equipped with the situational intelligence and technological advantages needed to act with greater confidence, speed, and precision during high-stakes missions. The Maven Smart System is expected to significantly enhance the alliance's capabilities in several areas. One of the most critical improvements will be in the realm of intelligence fusion, which allows for the aggregation and interpretation of vast streams of military data from multiple sources. This fusion will lead to faster and more informed decision-making processes. Additionally, the system will bolster targeting accuracy, provide enhanced planning capabilities, and create a higher degree of battle space awareness through advanced applications of machine learning and large language models. Sean Manasco, who serves as a senior counselor at Palantir Technologies, noted that the company takes immense pride in supporting NATO's evolving technology ecosystem. He highlighted how this deployment exemplifies the organization's ongoing commitment to maintaining a leadership role in innovation and digital readiness. According to Manasco, Palantir Technologies is not only providing software solutions, but also helping the alliance stay on the front edge of technological warfare. General Marcus Lobenthal, the chief of staff at the Supreme Headquarters Allied Powers Europe, echoed this sentiment. He stressed that in today's rapidly changing security environment, the ability to accelerate decision-making processes can often determine the success or failure of a mission. Another aspect that underscores the importance of this milestone is the speed at which NATO is able to carry out the procurement process. The Maven Smart System is scheduled to become fully operational within Allied command operations over the next 30 days. This swift deployment demonstrates how serious NATO is about integrating advanced digital platforms into its defense systems. It also reflects the growing importance of artificial intelligence as a critical pillar in global defense strategies. Since the onset of the artificial intelligence boom that began in the latter part of 2022, Palantir Technologies stock has recorded a dramatic increase of 910%. This explosive growth has pushed the company's total market capitalization to an impressive $200 billion. However, financial analysts on Wall Street believe that Palantir Technologies is not the only company poised for significant growth. Both Advanced Micro Devices and Uber Technologies are being closely watched by investors, with some analysts projecting that these two tech powerhouses could potentially surpass Palantir's market value over the next 12 months. At Wells Fargo, analyst Aaron Rakers has reaffirmed his outlook for Advanced Micro Devices, maintaining a price target of $140 per share. Given that the stock is currently trading at $91, this forecast implies an increase of 54%. If this projection materializes, Advanced Micro Devices would see its market value climb to an estimated $227 billion. Similarly, Mark Mahaney from Evercore continues to back his forecast for Uber Technologies, setting a target price of $115 per share. With the company's current share price at $70, this target reflects a potential upside of 64%. Should the price reach that level, Uber Technologies would be valued at roughly $241 billion. Let's dive deeper into what makes these two companies strong candidates for outsized returns in the coming year. First, Advanced Micro Devices has firmly established itself in the semiconductor industry, producing both central processing units and graphics processing units. These components serve a wide range of markets, including data centers, personal computing, and gaming consoles. Beyond that, the company also creates embedded processors that power technologies across automotive, industrial, and medical applications. The primary reason for investor interest in advanced micro devices stems from its growing momentum in central processing units and the potential for expansion within the graphics processing unit space. Over the last several years, the company has steadily gained market share from its key competitor Intel. Much of this progress is attributed to Intel's manufacturing delays and Advanced Micro Devices' successful partnership with Taiwan Semiconductor. That collaboration has enabled the company to produce more efficient and powerful chips at scale. When it comes to data center graphics processing units, particularly those used for artificial intelligence acceleration, Advanced Micro Devices has so far trailed behind NVIDIA. However, there are early signs this may change. As enterprise customers look for more cost-effective alternatives to NVIDIA's premium-priced hardware, Advanced Micro Devices has a compelling value proposition. The upcoming launch of its Instinct MI350 graphics processing unit in the middle of 2025 is expected to be a key inflection point. Chief Executive Officer Lisa Su recently stated that revenue from artificial intelligence accelerators would rise from $5 billion in 2024 to tens of billions of dollars annually in the years ahead. Wall Street analysts are forecasting that earnings for Advanced Micro Devices will rise by 39% in 2025. If the company meets that earnings target while maintaining its current valuation multiple of 28 times earnings, the share price could also rise by 39% by early 2026. That would give Advanced Micro Devices a market valuation of roughly $205 billion, placing it ahead of Palantir's current value. Should artificial intelligence hardware sales exceed expectations, the market could reward Advanced Micro Devices with a higher valuation multiple. In that case, the $140 target price proposed by Aaron Rakers would be more than justified. For long-term investors, especially those with a high tolerance for volatility, this may be an opportune moment to begin accumulating shares. Turning our attention to Uber Technologies, the company is not only the dominant player in the United States ride-sharing industry, holding a 76% market share, but it also ranks second in the national food delivery market with a 24% share. Internationally, Uber is the top provider of ride-sharing services in 9 countries and the #1 provider of food delivery services in 7 countries. Uber's growth narrative is centered on 2 key themes. First, the company's core operations in mobility and food delivery continue to expand, especially as it introduces new services in grocery and retail delivery. The Uber One membership platform has also helped drive customer loyalty. Additionally, Uber is increasingly benefiting from rising advertising revenue, which is fueled by its vast troves of consumer data. This data allows for more effective recommendations and ad targeting, making it a lucrative business line. The second pillar of Uber's growth outlook is its pioneering efforts in autonomous vehicles. The company is already working with several leading autonomous vehicle firms and has recently launched pilot programs in select markets. Chief Executive Officer Dara Khosrowshahi stated that Uber is far ahead of the competition in bringing autonomous vehicles to the mass market. He emphasized that this leadership position gives Uber the ability to offer the lowest operating costs for its partners, something that could be crucial as the industry evolves. Looking at Uber's financial metrics, the company estimates that its adjusted earnings before interest, taxes, depreciation, and amortization will grow at a rate between 38 and 40% through the year 2026. If earnings grow at 40% in 2025 and the valuation remains steady at 15 times earnings, a level that is close to its historical low, Uber's share price would also rise by 40% by early 2026. That would result in a market value of approximately $205 billion, exceeding Palantir's current valuation. Furthermore, should Uber expand its partnership with Waymo or enhance its competitive position in the autonomous mobility sector, the market could award it a higher valuation multiple. In that case, Mark Mahaney's $115 price target would become even more plausible. Regardless of how the future plays out, investors with a long-term horizon may find now to be a compelling entry point for building a position in Uber. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.